Hello everyone and welcome to Day Trader S&P 500. Today is Thursday, August 17th. This is Dale Woodson, editor of Woodson Wave Report. I wanted to show you guys again for a limited time we have 25% off all of our subscription services. You can see them there and what they offer. And on any of them, if you just type 25 in the discount code box there, hit apply, you'll see the 25% off right there. Okay, let's get back to our, let's start with our analysis, get our YouTube subscribers caught up with our newsletter subscribers to our reports. I want to touch base with the Qs again. They topped in November. Again, I want to stress the NASDAQ and the Qs, they're a product of the NASDAQ. They lead on the way up, they lead on the way down. The NASDAQ topped 2 months before the Dow and S&P. And you can see here it retraced a little more than 786 and it started down. I want to show you guys the overall count first. We have a 1 down, 5 ways for a 1 down October 13th, and we got a WXY. I don't like to label those too much because people get confused, they get a little complicated, but it's basically an ABC. It's 3 waves up and then a correction and then an ABC, which the last one is 5 waves up. But let me get to a smaller degree of trend here. Let's go hourly. Let's look at that a little more closely. So I did put out a report this morning. I'm out tomorrow. I can tell you guys about that. I won't be trading the market or looking at the market. I'll be out all day. But anyway, there's where it topped back on July 19th, and you know it's a different date than the S&P. So they're all not the same. They don't correct the same. They don't go the same percentage down in a bear market. All the indexes are their individual products, if you will. You can see here we have 1 down and 2 up. And I think when I did the report this morning, the 3 was right near the 1.618. You can see it broke through it. This is the hourly chart right there. Let me make that a little bigger for you guys to see. Okay, that's the Qs. You can see there it broke below the 1618. Let me look at that report we put out. There's the NQ, one of those subscriptions there. You can see that was done this morning before the market opened, and you can see right there we have a little bit more than the 1.618, which was yesterday, and since then it's broken below that. That's significant. But let's get rid of that here. There we go. And I want to get into the ES. Well, let's go, my apologies, let's go to yesterday's report so you can see what we were looking at yesterday coming in. Okay, Dale will be out of the office Friday, returning Monday. Okay, so here's wave 3 down in play. It had gone to this one target here. It was between there and the 1.272. We listed the targets right there. Okay, that's where it was as of yesterday, and since this is a third wave, we may expect it to gain a Fibonacci 1.618 multiple or more. There you go. So we were prepared, our subscribers were prepared, and very happy. Let's look at this 10-minute, I'm sorry, this is an hourly of the ES. You can see we have a 1 down, a 2 up. There's that 1.618 target, and it hit within a quarter point of it at the close, and it just now opened a few minutes ago. So scored a direct hit on that wave 3. We'll get into what that means. I think we might have that on a 10-minute. There you go. If 3 was complete here, and I think it's eked a little bit below there since the market opened a few minutes ago. You can see there's our wave 4 retracements, but those will go lower as wave 3 goes lower. Let's look at the report here that we put out post market. There it is, I believe. Yeah, post market close. Okay, there's the target and the actual direct hit at the close today. Okay, there's those 4 retracement targets. There's all those achieved. It was within a quarter point. We must allow for the wave 3 to hit our targets. It did. Excuse me. Since this is a third wave, expect it to gain a 1.618 or more. I think I printed that 2.618 here. Let me see. It hit on our target. Unless wave 3 decides to extend to the 2.618 multiple, that's at 42.93. We get a significant move below that low right there, today's closing low at 43.7850. That brings a 2.618 target into play. So it'll be very interesting to watch this tonight and tomorrow and see what this thing does, okay? When the fourth wave starts, remember, long sideways complicated affairs and take on many different patterns, including triangles, which, like I've said before, it's hard to get a triangle past me since back in 1996. That's the first one I learned, the first Elliott Wave pattern I learned by accident, if you will, because it just appeared as I was analyzing a wall chart in my basement back in those days. Okay, so I want to show you guys how, we had a direct hit there. It still may go lower, but it was a good one for today. I want to show you guys these direct hits we've had along the way. This is one there, one there, one there. We had that throw over fourth wave over there, and I think we had that that high, that B wave high, to within a point right there. So anyway, we're liking scoring the direct hits for our customers. They get these intraday reports, sometimes more than one a day, usually a pre-market open and or a post-market close, and if something happens during the day, we put that out to midday. So here we are here with that wave 3. Okay, and there's the wave 4 targets if we need them. Let me see if I can get that on. Yeah, let's see. That might be on there. That's the 1, that's the 2, that's the bigger degree of trend. Okay, the 1 with the circle and the 2 with the circle. But there's the there's a couple multiples right there around 42.92. We also have an open gap, which is very rare. Let me see if I can bring that reference up here. I think I still may have it. I've been putting it on the newsletters. Let's see if I have it here. Yeah, there's an open exhaustion gap at 42.98 from June 8th. I'll just read it. It's rare to have a gap remain open in the futures. They're open 23 hours a day. They close at 4 on Central and Friday and open at 5 on Monday. So they're open 23 out of 24 hours. It's very rare for a gap to remain open, especially one that long. So that was an exhaustion gap on the way up. And let's see if we can see that. I may get into the bigger picture. I wasn't ready to send this up there, but there it is right there. Let me get rid of all these for you guys. Remove that, remove that. There we go. 42.98, that's back there on June, I believe it is Thursday the 8th, yeah. So that's where that one remains open. We're working our way down there, so we'll see if it fills it soon. Okay, we'll see how this third wave goes. Let's leave you guys with the report from today, up to date, except for the last few minutes at the market open. There we are there, okay. And that's wave 3 should be ending soon unless it hits the 2.618. Then we'll get a long sideways choppy forward, and we'll get a 5 down to complete the larger first wave, which will be obviously lower than the third. Okay, guys, you have a good one, and until next time, take care, everyone.